This is the market comment for Wednesday, November 8th by Heralan Buspisuros. I'm Cristina Marujos, and thank you for joining us here at XM.com. The US dollar continued recovering against all the other major currencies on Tuesday, as several Fed officials reminded investors that the door to further hikes remain open. Fed Governor Christopher Waller said yesterday that the 4.9% GDP growth rate for Q3 was a blowout performance that deserves watching closely, while Governor Bauman said she took the number as evidence the economy did not only remain strong, but it may have gained speed as well. Although Waller did not specifically refer to whether additional hikes are needed or not, Bauman said that the growing economy may indeed require a higher policy rate. Chicago Fed President Goolsbee and Minneapolis Fed President Kashkari repeated that the rise in market-based interest rates likely represents a tightening of financial conditions, but neither ruled out additional hikes. Yet, despite the recovery in the dollar, investors were not largely convinced that another hike may be on the table. This is evident by the fact that, in contrast to the dollar, the 10-year Treasury yield slid yesterday, and by the implied path derived by Fed Fund futures, which point to only around a 15% probability for one more quarter-point rate rise and around 90 basis points worth of rate cuts by the end of 2024. Looking at the broader economic performance, there is nothing justifying so many basis points worth of rate reductions. Therefore, should U.S. growth-related data continue to point to a resilient economy, there is ample room for upside adjustment and further recovery in the U.S. dollar. Today, the spotlight is likely to fall on a speech by Fed Chair Jerome Powell. If he echoes his colleague's remarks that the chance for higher rates remains firmly on the table, or if he highlights the higher for longer mantra, the dollar is likely to extend its gains. Wall Street ended Tuesday's session in the green, with Nasdaq recording the most gains, as the pullback in Treasury yields may have helped high-growth mega-cap stocks. It remains to be seen whether Powell will be able to lift yields today, something that could prove negative for stocks. After Powell, the next big test for the markets may be next week's inflation data for October. Oil prices fell yesterday, with WTI crude oil tumbling more than 4% and hitting its lowest since July. This may have been due to mixed Chinese data during the Asian session yesterday. Moreover, a recovery in OPEC exports by about 1 million barrels per day since their August low suggests there may still be much supply to be absorbed by oil-consuming countries. Thank you for watching today's market comment here at XM.com.